Hello and welcome to Trading Growth and Value Stocks. My name is James Boyd. Welcome to all. We have Connie Hill in the chat as well. There's the bell, and this is the last class of the day, and we're gonna make it maybe perhaps let's try to focus maybe perhaps the best class of the day right at the end of the day. Now we'll talk about some of the questions you've had on some earnings plays. Example given Google. We'll look at that. I want to get to that right off the bat. And also remember that when we talk about our examples here today, they are stock focused. It's trading growth and value. We will also talk about some income here today as well. Kind of have some, the title of this class will be Tailwinds for Equities. Okay. So when we say tailwinds, we're saying things that could help equities maybe rise even further to the upside. Now, with that potential good news, let's go ahead and hop right in. Now, remember, as we talk about this, this is an open dialogue, okay? This is back and forth. This is not a lecture, okay? I don't do lectures. Now, also remember that as we talk about examples, the information we talk about here is provided for general informational purposes only. Schwab does not recommend the use of technical analysis as a sole means of research. That's why we're having this class where we want to look at some of the fundamentals and also some of the relationships called intermarket analysis that might help some of these stocks go up perhaps. And also we will be using the Paper Money software application. We have the margin account and the IRA, and that's what we use to do our sample trades on. I ask as we do that, feel free to paper trade alongside us. They are not recommendations, but that's the way you learn, okay? That's the way I learned, is actually practicing, okay? And I will make sure I repeat myself as we go over examples and be very specific as far as what we're doing and why. Now, today what I want to do is I want to kind of talk about what are some of those tailwinds that we saw today. I don't know if I've seen the tailwinds as strong as I saw today, and I'm going to talk about what those are for stocks. Then we'll actually talk about kind of where the portfolio stands in terms of current positions. We'll also look at Google and then look at some new positions. First off, let's kind of speak to what those tailwinds are. So first off, kind of one of the tailwinds we actually saw, crude oil itself was down $1.52. And so if you kind of think about something, where do people get the money to buy stocks? Well, they stop spending money or they spend less money on stuff that's maybe not as expensive, okay? So number one tailwind we actually saw today was, okay, something that can help equities rise is oil prices falling. That's one, okay? That's not to say that you don't buy oil, but if the prices go down and it correlates to the pump price going down as well, that could be an extra place where consumers, investors might have a little bit more capital to invest, not just spend money at the pump. So keep an eye on that. If you kind of want a tailwind, that's one of them. Second thing we actually saw here today was let's type in TNX CGI, okay? And this is the 10-year note. We know that all investors or consumers, they're tied to this, right? We're looking at the 10-year yield. Now, the number on the right-hand side is going to really show 44.22. Move the decimal over to the left one, and you're getting 4.422, okay? And we've actually seen a pretty good decline of this. Now, we know how this relates to consumers and investors, at least consumers, that is, right? I don't think any consumer says, oh, I'm willing to pay more, okay? You'd like to see this actually drop so the cost of things potentially becomes less. And also for businesses, the borrowing cost could potentially become less. This is the second tailwind we actually saw. Now, can anyone actually tell me what maybe neighborhoods, sectors, or indexes might benefit from this declining? Now, as I'm getting an answer to that, we talked about, for example, we talked about the VIX, we talked about crude oil, we talked about the 10-year, and I'm also going to bring up third, the VIX. Nothing major here. Did see that drop. Now, remember, if you're a bullish investor, you like to see the volatility go down. Now, I think I've been very, very clear on this. Whenever you see news comes out, news is news, okay? We saw the news come out on the tariffs, and I even tweeted about it. I said, this ain't about tariffs. This is getting people to come to the table, and it's called renegotiate terms of trade. So forget tariffs, okay? Think about it as, so the instrument is tariffs, but what is the real purpose? Well, the purpose is to create a fair trade relationship. Now, we could talk about that back and forth. But the biggest thing is, from that news where people are so fearful, that fear didn't last very long. And that's the same thing we see so many other times. The fear doesn't tend to last very long. And that's why when we see the VIX above 18, a lot of people try to come in here and take advantage of that opportunity of fear. Now, that fear can actually be it can seed an opportunity for buying the stock as it drops, maybe closer down to support. Be very careful of getting suckered into fear, because institutional investors are thinking, hey, I'm glad there is some fear. I'm glad there's maybe what some view as bad news, so that way I can buy things closer to support on good businesses. Okay, good. I think we all get it now, okay? Now, so that's the third tailwind, seeing the volatility drop. And the last one I want to bring up just real quick is the dollar. Now, the US dollar, we've actually seen kind of dropping down a little bit, not to a fresh new low, but we actually did see that drop somewhat. Now, so those are kind of some of the four tailwinds we see: crude, VIX, the 10-year yield, and we also saw the dollar kind of more neutral, not going up as much. Now, from a sector perspective, just briefly, if we said, okay, what sector might benefit, or sectors or index, from maybe rates declining? Well, number one, and this should not shock you, because if you're a consumer, you don't have to be an investor, okay? You could just say, I went to school and I got a PhD in common sense, okay? You'd probably correlate it. You could probably pick it without even knowing hardly anything. Well, the one thing we did see here today, when we talk about percentage change, we saw real estate at the top. Now, that's probably not shocking. That's what I was kind of saying. It's not really about investing, just about living everyday life, right? So rates fell, real estate pushed to the upside. Over the last 3 weeks or so, it's been fairly decent. We'll talk about that in just a moment. When we also look at, let's say, another spot, when I look at the weak percent, utilities, okay? Very capital intensive. You did see those number two there, and you're seeing also healthcare there as well. So keep an eye on those. I think that's a big difference of what we've seen here today with the four tailwinds we just talked about, that, which is utilities, and I'll show you those on the chart. Healthcare is more of a continuation of what we've been seeing. Real estate, that is different, okay? And I'm going to show you those on the chart right now. What do these actually look like on the chart? Does it relate to the class that we're going to do here today? Yes. Now, earlier today, Barbara Armstrong talked about price patterns. And if we were to kind of use this and say, do we have a potential price pattern here? What type of price pattern really has an upward sloping diagonal support and a downward sloping resistance? And now we're getting to the point where could these lines start to overlap each other? Now, a lot of times people say, well, I can't invest because it just takes too much time. I'm just too busy. You know, I've noticed in my life, the most successful people run circles around other people that say they're so busy. When people tell me I'm busy, I'm like, well, you're not busy. You just waste a lot of time. So the biggest thing is we wanted to hear today is focus. Technicians, fundamentalists, when we, for example, actually want to be time sensitive and kind of make sure we invest time, not spend time, well, we're going to keep an eye on this one. We're going to look at examples in utilities here today, because if you take a look at this, we're kind of getting to the apex. Traders who are time sensitive or, hey, I'm busy, they might say, I'm going to set an alert or look for some stocks that could be leading the sector. Do not think because the sector hasn't broken out that there's not a stock that's broken out. That's not true at all. Okay, and it won't take you very long to find them. Okay, speaking of that, we'll pull that up. So how do you do it fast? 60 seconds or less. We're going to go to Scan, Stock Hacker. We're going to speak to the person that says it takes too long. If I said a stock price, stock price, let's go volume. Let's go 500,000 here. Okay, What I'm going to do is I'm going to say stock price, or I'm just going to put mark price, $40 or higher. That's the only two things we're going to look for here, okay? And I'm going to take one off. Got 40 seconds left. Stock price greater than 40, over $500,000. We're going to say, look, scan in, go to the public S&P 500. If we do that, we're going to actually go to the industry group, going to go to utilities and select utilities. Now, if I do that, I get an immediate list back. What can we do with these 33 stocks? It just so happens we could take those stocks, save them as a watch list. I'm just going to call them a U, okay? Now, when I do this for utilities, when I do this and come back to the market watch and go right back to that personal watch list, U, I now have a list in 60 seconds that I could ask questions like, such as, which one is showing relative strength? Okay. Oklo has actually been very strong. Okay. If we said, well, which one is doing a brand new potential breakout? Oklo. Okay. And which other one? EXC. Okay. Both on the 20 and 55. If we actually said, well, which other ones may be doing a shorter term breakout? ED. And you're going to notice right here on CMS, right there as well. How many charts do we pull up to see that? 0. Okay. So don't say you're too busy. Nobody's too busy. Okay. I got a lot of things. I got 4 kids and a dog, 2 grandkids, the whole 9 yards, other things that I do. I ain't too busy. What you'll probably find out is people will actually make time if it potentially has upside potential. Okay. Now, you're going to also notice on the right-hand side, there is a whole bunch of bull flags there. Now, some of you actually kind of are mentioning the Oklo. What you're going to now notice is that's been one that's actually been very strong to the upside. Now, let me ask you a quick question, then we're going to go hog wild here. How many of you think that that was not really a lot? Like, in other words, you can go to the scan and just go mark greater than 40, volume over 500,000. Notice I don't use like a secret hot sauce list. I just take the stocks in the S&P 500 because those are the ones that actually are big enough to be on there and meet the requirements for the S&P 500. Okay. I mean, why not? Okay. Maybe that would be a good starting point. Volume, price, acceptance by institutional investors, and so on. Now, what you're now going to notice is I'm going to go to a couple of the others, and I'm going to come back to Oklo in just a sec. One of the ones that kind of stood out here today is I'm going to go back to CEG for just a second. Now, CEG supposedly, and I'm going to pull this up also on Schwab.com. We'll also pull it up on the fundamentals as well. But if I went to, let's say, analyze, and we went to fundamentals, a lot of you might say, well, James, I don't really know what CEG really does. That's okay. That's why we have this tool. We're going to go to the analyze. Going to go right to here where it says fundamentals. So they generate and sell electricity. Now, one of the things that we've actually been seeing is a lot of this crypto takes a lot, okay, Bitcoin, etc. It takes a lot of electricity, okay? Now, what you're now going to notice is you're going to see that they have all types of different capacity for nuclear, wind, solar, etc. And it's really municipalities, commercial, industrials, they're selling to everyone, residential and so on. Now, what I want to do here is I want to go look at this one first, okay? Now, CEG, when you take a look at this, the reason why I'm actually pulling this up, and I want to go back to this, and I want to kind of circle something just real quick. So when we look at CEG, and I'm on that line, the trend is a 3, right? And you're going to see that the RS is, in the last couple of days, has been solid. A little softer on the 10, but the other weeks have been green. It's showing a close above the high of the low day, and you're going to see that it has this green background here. What does that green background actually tell us? Okay, again, I'm talking to the people that say that it takes too long. Okay, well, by the way, you can also see this on your phone. It's not color-coded like this, or your iPad. Okay. So if you look at that, if we actually saw MAX with the green background, script's not guaranteed for accuracy, confirm and verify. But if you actually look at this, it's actually saying the cross is happening today. Now we could go verify. If I pull this up, what you're now going to notice is if I go to this on that chart, CEG, okay, there's that cross. So if someone says, well, how do I find the crosses? Well, you can go to my X page, which many of you have. I'll show you that in just a moment where you could grab those. But that's actually showing a little cross here today with the lower shadow right at the moving averages. So this is a company that's actually buying and sell, they produce, okay? What's the exact wording? They generate and they sell. Now, when we look at these numbers, okay, in 22, they were actually negative on earnings per share. In 23, they were 501, big turnaround. And then when you look at the quarterly, you're going to see that those numbers in Q1, 2, 3, quite solid. Q3 has actually been the strongest. Now, if you look at this and said, well, is this really energy? Is it more utilities? It's classified in utilities. Now, do not be foolish to say, oh, these utility stocks can't go up, okay? They can, and they can go down too. Now, what I'm going to do is I'm going to go to the trade tab. And what I'm going to do in this case is we're going to just go to the trade, the CEG itself, and say, what's the volume like? Well, the volume is 3.5 million shares. Click on the drop down there. Does it give a yield? It's only 0.5%, or in other words, 45 basis points. That's it. And the PE is at 34. So this one, and we're going to show a couple, this one is not really about like dividends. It's not like a real estate stock that we'll look at in just a second. Now, that's not necessarily bad. Some investors don't want the dividend. They really want the potential stock appreciation. They don't want the investor to return the earnings. They want it to actually invest the earnings they actually have and maybe do something else with it to cause the earnings per share, revenues to grow, etc. So trade number one that we're going to do here is on CEG. Now, by the way, if you follow us, we have a IRA account and we have some stock positions. And we also have those positions in the margin account right there as well. Now, what I'm going to do for the moment, I'm going to do this in the IRA for this one. It's a bigger dollar stock. And what we're going to do, and let me ask you a question. If you were to look at this and say, I'm going to set my stop below here, where is here for you? Now, what you're now going to notice is it also had a pretty good gap down, and it's come about halfway through the gap down. Now, sometimes these stocks will gap down and they'll come right back up. Not all the time, sometimes. Now, for some technicians, people that are buying the stock because they looked at the technicals and the fundamentals itself, they might say, James, I'm going to set the stop right underneath the intraday low, which is tippy-toed all over the moving averages here today. Now, how do you buy the stock? What we're going to do in this case is we're going to right-click, buy custom. We're going to go with OCO bracket. Remember, this class is not buy and hold. It's trading growth and value. Now, we could actually say that this is slight income, but if we go also back to this prior high, that prior high, and I'm going to shave a little off the top, that target price is probably right around 346.43, okay? Now, I'm going to tell you, with everyone that is listening to me what I'm saying here, when you think about it, most investors who have any asset allocation to equities at all, they're always looking for some good quality stocks. It's not to say that they always do good, but we're always looking for good quality stocks, okay? Now, if I look at the target, you got about 346 and change. If we said, where do we see support? It's about 302.72. 302.72 less 2%. It's going to give us 296.66. I'm going to go ahead and put that right there. 296.66. Okay? Now, I'm asking you to paper trade alongside with us. That does not mean that these are recommendations. How do you learn the best? You don't just sit there and watch me do it. You actually say, okay, I'm going to paper trade alongside, so when we're not in class, I can see what's happening in some of the recent positions and learn. As you learn, then you start having questions, okay? And that's really what you're trying to get to. And now, if you take a look at this, we're going to type in how many shares or capital. We're going to say about $6,000 worth of capital. How many shares is that going to be? It's about 19 shares of stock. Now, I know you're thinking, man, gosh, I would just love if I could buy 100. It's not always going to be the case, okay? Dated GTC. So on the sell orders, this is just a bracket order, right? Got a target, and you got to stop underneath. And there it is right there, okay? Okay, so trade number one, CEG. How did we come to CEG? Ran a scan, found about 4 or 5 stocks that were hitting some brand new highs. One of them was also a moving average crossover as well. Now, the one thing I want to kind of point out here is when you go back to that market watch list right there, I will also bring up Oklo because there's been some questions on that. Now, we are not saying if you looked at Oklo right there, which shows X plus 1, and by the way, let's kind of bring this up because Oklo, that hasn't really been in the radar for a while. Let's kind of bring it up and kind of look and see what's causing the big changes. When we look at the 1 month percent, 129%. Year to date, 131%. So this has been quite interesting. Let's go kind of do some due diligence here. And if we look at this, let me bring up that trade and we'll send it through. Okay, so trade number one, CG. Okay, we're trying to get in. If we see rates continue to fall, could that help the space of CG? Now, we would also kind of maybe like to see crypto go up. If crypto goes up, there might be more businesses that need electricity, okay, and so on. And then some of these companies like this could actually help them get the electricity. Now, you're now going to see with stop orders, there's no guarantee the execution price will be equal to or near the activation price. The activation price is the stop price, okay? Send the order, and let's see if it fills. Now, we're after hours, it ain't going to fill. It won't fill tomorrow, and then even then we need to see if that can fill. Why did I say that? Well, because this is a buy limit order. This is a buy limit order. We're saying 313.65 or less. So if that stock opens up at 314 tomorrow, never comes back down, and we never adjust, we don't get in. Okay, so you might have to look at that in the morning and say, where's the price? If it's down at 311, 312, could it fill at a lower price? Yes, it can, but it can't fill at a higher price than what I'm pointing at. Let's go back to Oklo for just a second. Oklo, what do? Well, when we actually pull up Oklo, and let me just pull it up right here. What do? How's it so different? Why did it go up over 100%? Okay, and could there be more in the tank? So it's still classified as utilities. You're going to see that they design, develop fusion power plants, and they do commercial scale energy to customers in the United States. It also provides nuclear fuel recycling services. Okay, now when we actually go back to annual just a sec, they really were down even more. Okay, but you look at the last, let's say, quarter, they've been trimming the loss, 299, 479, 517, and the big turnaround was really in Q3. Now, this might seem odd. This is not like picking a company like Apple where they're all positive earnings per share on a quarterly basis. Why are investors buying it? Same the reason why they bought Palantir, right? The reason why they're buying it is they're thinking, could this be starting to become profitable? The business has invested a ton of money. And when they invest, okay, they're eating away the profits. And are they starting to create those relationships, the contracts, etc., and not having to invest as much, thus actually creating profits? So sometimes they don't even have to be positive profits. They could actually just be that it's actually getting closer to becoming profitable. Okay? Now, in this example, when we look at Oklo, let's pull this up, OKLO, you're going to see that it's been on a very strong upward move. Now, when we talk about momentum, right, we always kind of talk about, look, the red candles, down days, you're going to notice that we've only been, let's say, since the date of January 15th, went down for a day and then went up, went down for a day, went up, went down for a day, and then went up. Okay? So when you see that, that should be immediately telling you, you don't need technical analysis 1000. If you see the price only go down for less than 3 days, only to see the price go back up, say the word momentum. Okay? Now I'm going to tell you right now. You could say, well, how long is it going to take me to remember that? Write it down. But the thing is, we overthink this stuff. We overthink it. Okay? So that's why a lot of investors look for prices above the moving averages, number one, and then say, hey, when the stock does go down, which by the way, if it didn't go down at some point, you would never have a higher low. Let me repeat that. If the price never went down, red candle, you would never have a higher low. You need the price to drop down to create a higher low. A higher low is a part of an uptrend. So don't look at the red candles as bad. They are a part of the uptrend, okay? If you just made a higher high and you finally get a red candle, make a higher high, the highest likelihood is a higher low. And if you get a higher high and a higher low, you get an uptrend, okay? Good probability of the uptrend. Now, what I'm going to do in this is I'm going to right-click on the chart. Now, the thing we got to be careful with is, how do we know that Oklo, what could it do? Well, let's pull that up in just a sec, not get ahead of ourselves, okay? Now, I've never gotten ahead of myself, ever. Ever. All right, here we go. Now, what I'm going to do in this case is I'm going to hold this right there for just a second. I'm also going to just kind of put this, our kind of cursor right there at the stop. One thing I want to kind of do is kind of go back to the Schwab.com website, okay? And what I want to do is, right on the Schwab.com website, okay, we can actually see kind of what is those forward earnings expectations. And this is important because the company a lot of times will tell investors what they think they could do in the future. Now, here's the deal. People say, I don't even look at this stuff. Well, the thing is, it kind of gives investors something to target, okay? And also what they do is they compare the future forecast of the growth to other companies. Now, I'm on Schwab.com. Great website. Lots of goodies here, okay? Now, so many good things. Okay, let me focus. Okay, we got Oklo. And I'm going to scroll down, okay? Now, one of the things is, so first off, they don't pay a dividend. Not necessarily bad, okay? But they don't. The expected earnings, what you're now going to see is they give us the expected earnings in the future. Now, this is a little unusual. I'm doing this on purpose. Down 7 cents, down 8 cents, down 8 cents, down 8 cents. Okay, now, so they're not forecasting that it's actually going to be positive. But if any of these numbers are just better than expected, all of a sudden investors become so hopeful that Oklo is now turning positive. Now, a part of investing is expectation, right? And if they just surpass the expectation, investors might become, let's say, hey, I want to be more aggressive. They become hopeful, maybe all the above, and they might want to try to buy the stock. Now, the one thing is, if you look at Oklo and you compared Oklo to many other companies, etc., you got to understand something is they might like Oklo compared to others because there is potential growth. Now, if Oklo actually does grow quite a bit, could another company maybe try to buy Oklo? So they're trying to maybe, if they did do that, they try to buy some of these up-and-comers, okay, for maybe a certain premium above what it's currently trading at. So that's kind of the other maybe, why do people speculate like this? These up-and-coming stocks, if they can turn profitable, the other more mature companies might try to come in and make a tender offer, okay? I'm not saying that's going to happen. I was just saying that's the train of thought. Why do people start targeting some of these stocks? Now, what I'm going to do is going to come back to this, and I'm going to look and kind of say, where's the trend line? Well, the trend line, if we take a look at this, kind of draw a diagonal line up, it's probably right about there. There being about 43.34. Now, the one thing we got to understand here, the higher that we are off support, the more probable it becomes to what? Fall back down. Now, what I'm going to do is, this is pretty high off that diagonal support. What I'm going to do is I'm going to kind of put a buy limit order right in the middle of the large green candle today. No one says we have to buy it at the current price. Could we come down a little bit closer to support? Now, if I did that, we're going to put the price at about 48.60. Now, the con about this is, James, wonder if it doesn't come down. Unlikely, but let's say it doesn't. If it doesn't come down, doesn't fill. Now, the reason why we're trying to buy a little bit closer to support is that way if we're wrong, that support is sitting here about 43.04, less 3%, because it's lower than 50 bucks. Okay? And if we did that, 41.74. Now, when you position size, you got to understand something. When you have a bigger risk per share, it's going to drop the number of shares that you can really purchase. And that's kind of a defensive way to be defensive, right? If you risk more per share, it's not going to allow us to invest as much. So in other words, if we said, hey, we're able to buy, let's say, risk $300. Well, all we would need to really do is if I took $300 of risk and said the risk per share is about $7, it's going to tell us, look, we could do about 42 shares of stock. That's it. 42 shares of stock is not even a full position, okay? But that's where the investor chooses the smaller, not picking by capital, they're actually doing the smaller number of shares. 42 shares, risking about $7 per share each, well, that's going to give you about 300 bucks, okay? So if you buy higher off support, it's not going to allow us to buy more shares, or in other words, a bigger amount of capital. Now, if we look at the target here, I'm just going to even put a target out here at 55. I don't even know if we could see a target, okay? Now, this might be actually absolutely insane. You might say, why'd you even set 55? It's kind of eyeballing these areas from there to there, there to there. Now, I'm not a wick person, okay? A wick person is someone who, for example, takes the extreme points. And if we were to kind of extend this into the future and say, yeah, look, if it went up over time, where might it try to go up to? The reason why I gave 55 is we said it took a little bit of time to do this. 55 in the short term might be that area. That's about $7-ish. $7-ish on a $48 stock. It's about 15%. Okay. Now, do we know that it's going to do that? No. Okay. Now, second trade we actually did. So the first trade, tell me what the first trade was. The first trade we actually did, what was it? Okay. Some of you are thinking, hey, well, what? Good question. What was it? Well, it was CEG. Now, CEG actually has kind of more of a track record. It's more proven itself. Oklo is more speculative. Okay. And what you're now going to see is we're going to go confirm and send. Read that order out loud. See the red line right there. Trade number 2, Oklo. Send the order. Now, I want to go back to just real quick Google as well. Okay. So Google, when we had earnings on Google, sometimes when you buy stocks, you're thinking the company is going to match expectation. Sometimes they don't match expectation. We decided we were going to hold 33 shares of stock on Google over earnings. Now, going into the earnings, we probably had about a $250, $300 gain. Not only did we give it all back, okay, meaning we gave the $250, $300 back, but now we're underwater, meaning that we bought those shares at 196 and change, we're at 191. Now, sometimes we're right, sometimes we're wrong. That's nothing new. We already knew that. If you play many, many earnings, there's going to be some of these that actually do gap down. Okay? Now, if we look at Google and say, well, now what? Well, if you look at now what, it just pretty much fell right back down to the support level. So I don't really have a whole lot to say on that besides kind of wish we knew that yesterday it was going to gap down and be short of expectation, okay? But it's just fallen right back down to the support area. When it gapped, it sold off intraday down to the support. Good things so far. Buyers did come in and buy some. But clearly over the next 2-3 days, we need to see this actually bounce. We start going south below 190, these forward expectations could start to crumble. Okay. Now, I want to kind of show some other ones just real quick. The other speculative stock that I think we need to, that we're going to paper trade, and this is a little shocking, is Boeing. Okay. Now, Boeing, we know that there's been, I don't even know if you can make it up. If someone said to you that the door was going to fly off mid-flight, the wheel was going to drop off when they actually took off the whole 9 yards, I think we would all just be mind blown. Okay. Now, if we take a look at this, you're going to see that on the right-hand side. Now, I'm going to pick another speculative stock, something where they have not had positive earnings. Now, this might absolutely baffle you, but sometimes, okay, the companies could actually make decisions on actually how to turn the business around. Okay? Get rid of the past CEO, get rid of the past CFO, get rid of some of the people that maybe have been causing some of the issues, and so on and so on. Hire new people to actually make the better product and actually be able to sell it and have confidence in what they built. Okay? Now, if you take a look at this on the right-hand side, you're going to kind of see that we have like an ascending triangle. I'm going to do this one briefly. If we look at this kind of and said, well, what type of trade is this? Is it really about income? Well, you take a look at income, it does have a 4.5% yield. But the problem to get that yield is you got to invest longer term to get it. And that's not indefinite. They could cut it. The P is negative because their earnings has been negative. But I think you'd probably say that this is almost more of like a value, perhaps, provided that they actually turn around their business. Now, when you go back longer term and kind of say, where do we kind of see some lines of resistance? Okay, well, probably right around 193 and change. Now, sometimes some of these stocks that have been what people call dogs, okay, some of those dogs can actually start to turn around, like Disney, Nike, Boeing, and so on. This is probably not the first area that someone would actually say, I'm going to start building my account in the paper money account with stocks that are like this, but I want to show these because some people do like these. Now, by the way, this does not have to be from a stock perspective. Someone might choose a different type of strategy. Noted. Okay. I know where you're going with that. Okay, good. I think we're on the same page. Now, if I look at the trend line, where's the bottom end of the trend line? 175, okay? 175.91, less 2%. 172.39. So 172.39. 172.39, stop day GTC. Okay, so there's this. If we go below the diagonal support, less 2%, there's the stop. Capital size-wise, right? If I come in and say we're going to normally buy that $6,500-ish of stock, it's going to be about 35 shares of stock. So if I type in 35 shares here, and I put that target and say, what is that potential target? Now, if I said I'm going to put the target right about $193, that's just that upper line, that old resistance, or I should say old support, that might become resistance, okay? So Aqua, you could say, it's speculative, okay? You could say Boeing is speculative, meaning that the history has been poor. That does not always mean that the future is going to be poor, okay? And so that's what we really need to understand. It could be something where it's trying to turn itself around internally, thus the fundamentals and the technicals. Now, if we go back to the weekly chart and kind of say, well, what is that chart really showing us? Anything on the weekly chart? Well, you actually did have a crossover, and you're going to see that one thing I will notice here, it had a negative crossover, but that negative crossover did not last very long so far, as you saw buyers coming in and trying to push it back up. So trade number 3 is, now by the way, is that bad? Is that bad that that negative crossover didn't last very long? I don't know if that would be a bad thing, okay? I think bullish investors might be looking for that, okay? Now, you don't see me flying anywhere. I'm not kidding. When I go to the airport, it feels like I was just in a different life when I used to live at the airport. Yeah, now I just walk out to the mailbox. That's pretty much all I do. Now, confirm send. Where I'm now going to go ahead and do target, stop, read that line. So third trade we're going to do is buy. We got two speculatives, Oklo, Ocoklo, and BA. And the first trade we actually did was CG, more proven. Now, I want to go back to something else for just a second. I want to flash a couple stocks, okay? So Walmart, okay? Some people say, well, I'm not going to get in Walmart because it's boring. Yeah, think whatever the investor wants to think, right? I don't know. I mean, if this is boring, okay, maybe someone says, okay, I reconsider. Now, I'm not going to get in Costco because it's boring. Well, you can think whatever you want. I could be wrong, so could you. Okay? If you look at Costco lately, those green lines on the moving averages, as Bill would say, to the upside, pretty strong there. Cisco, which we have a position, also showed a crossover here today. First day was yesterday, second day today. Doink, that is a brand new high here as well. I'm going to tell you over and over again, the credit cards do not look like they've maybe put a fork in them, okay? If you look at the credit cards like AXP, you have the old resistance here. And if we take that line going all the way forward, we're seeing that old resistance becoming new potential support. And if we just looked at that, I'm seeing a whole lot of wicks. What do the wicks tell us? What does that wick tell us? Someone's not letting the prices come all the way down. Dale Reeves coined the term greedy buggers. Never forget when he said that. It was so funny. When you see something break out and it falls down, and you're thinking, well, it should fall down to 307. But it doesn't. It only falls down to 310, and you're waiting to get in. But it doesn't fall down to exactly where you want it to. But people are, becoming impatient, greedy buggers, okay? And all of a sudden they're thinking it can reverse. Now, in the shorter term, you're also going to notice it with this that we do see when we look at this, and let me draw that. Yeah, right there. Little W pattern. It's slanted down, but you're going to notice we have a hammer candle right into the middle of the W. Guys and gals, okay? If you take a look on American Express, that one probably would be like a buy stop or an alert if it gets above probably 321-ish. If you see its twin cousin with red hair and freckles, Visa, every time you swipe that card, debit card, credit card, they're just making a little slice off every blasted purchase. If you look at Capital One Financial, DFS, and so on, if you think we're in a recession, someone needs to tell these credit cards that they're actually in a recession because the stock charts are on fire. Now, that doesn't mean they're going to keep going up, but you're going to see that they've been very strong. Now, let me round this out. When you look at the XEL, keep an eye, that's also utility. That's kind of more like your classic inverse head and shoulders neckline at 68. Keep an eye, okay? EXC, that's also one that we would say is more of a continuation, okay? Netflix, NFLX, you're going to see if we look at that, doink, that's a classic bull flag to the upside, little run, pullback, higher lows, doink, okay? There's a flag, right? And it just kind of broke out of that and confirmed that more today. Last but not least, when we speak of, let's say, communication, T-Mobile. Now, T-Mobile, we do have a position on it, gap to the upside, left lower shadows down near the moving averages, and got a little push. So guys and gals, I didn't even go through all the ones I wanted to. There's a lot out there, okay? Now, one thing I say to do for homework is I want you to look at some of the stocks in the utility space. I want you to look at some of the stocks in the real estate space. I want you to look for opportunities also in some of those areas that we actually talked about, also in communication and discretionary, okay? A lot of things here. And by the way, keep an eye also on Meta as well, and that is communication. But we did see the push here today on Netflix. Now, I want you to practice looking at some of these. I want you to kind of think about if you had a finite amount of capital, which we all do, which businesses do you want to invest in? Are they a leader in their space? Okay. I also would like you to look at maybe one or two stocks like Okla or Boeing that might be turnaround stories. Okay. Now, I'm out of my time here today. I want to also thank Connie Hill for answering those questions in chat. Tomorrow morning, we'll be back. Feel free. I'll also post in the chat the link for our playlist for our classes that you can actually go back and look at previous sessions. And we also did 3 paper trades as well. Now, I want to give us a quick reminder that with what we discussed, it was done for example, illustrative purposes only. We'll follow through on the Google tomorrow as we can talk about that type of strategy tomorrow at 1 p.m. Eastern. Thank you so much. And this has been the class on trading growth and value. Did include some income here today as well. With that said, have a great evening. We'll see you back tomorrow. Take care. Bye-bye.